Welcome back, traders and investors. Steve Spencer here of SMB Capital, founding partner there. Steve, how you doing this morning?
I'm great. How are you, Joel?
I'm doing well. I'm doing well. Could you just give us a little bit of your market and education background?
Sure. Education, undergrad, went to Wharton Business School, started trading in the mid-1990s, while I actually simultaneously went to law school. Have been trading full-time. Next week will be my 18-year anniversary. Started out trading on NASDAQ stock market, worked for a firm in downtown Manhattan on Broad Street, and after about a decade, founded my own trading desk with a good friend, fellow trader Mike Bellafiore, who's well known for One Good Trade, his first book
Uh-huh.
on kind of the founding of our firm.
Okay, so you've traded a lot of different markets in your career. Do you have a favorite and a least favorite?
You know, that's something that I was actually thinking about recently, because the market that we've been in for the last couple of years is something that I wrote about in the beginning of 2013, and I came up with the term new normal to describe a market with lower overall volatility, that was more conducive for swing trading and longer hold periods because of that lower gap risk, lower event risk. And you compare that to what we went through in late summer, early fall of 2011, where the U.S. markets seemed to be very concerned about what was going on in Europe and other macro type risks. And the one thing about 2011, when the market swings 3, 4, 5% a day, there's incredible opportunity for a short-term trader such as myself. And I'm happy to get in there and get short and get long and trade that momentum. But honestly, as I was thinking about it over the last month or so, I actually prefer the market that we've been in since 2012 and 13, where there's that level of stability that I know that if I'm holding a large book overnight, I don't have to come in the next morning and worry about the market gapping up 3%, down 3%. Maybe it's because I'm a little bit older now and I've been doing this for a long time,
Right.
so I don't need as much excitement. But that's kind of my thought overall.
Okay. So what was the most important trading lesson you learned early in your career?
That was, like most traders who've been around the game for a while, you learn things very early in your career that you either take them to heart and make changes, or you're eliminated from the game rather quickly. And I think one of the things I learned probably in my first few months of trading at my first job was not to overvalue my knowledge about companies or specific fundamentals when I'm using them in short-term trading. And I learned that, very quickly. Because of my background, I went to business school. I've been reading the Wall Street Journal probably since I was 12 or 13 years old. I knew a lot about the companies that I was actually trading. And when I started to apply that information and that knowledge to form a bias based on certain fundamentals, I was losing money very quickly. When I moved away from that and I started to understand that, what's moving stocks in the short term is not the things that are the same as what drives them long term on Warren Buffett's time frame. And so learned that lesson quickly, and I've incorporated that into my trading style over the years.
Okay, so are you still kind of sticking with the core strategies that you developed early on in your career? Or are you constantly looking to develop new strategies?
Definitely looking to develop new strategies. And so to me, I think there's two parts to that. Number one, it's about 11 or 12 years ago that the core strategy related to short-term equity trading that Mike Bellafiore and myself started to develop, which is this concept of stocks in play, stocks that have fresh news catalysts. We had to develop that strategy because the market basically, after the internet bubble burst in 2000, and we went down for about 18 months, in 2002, the market basically stopped moving. There was no volatility, no movement overall, and so that we honed in on trading stocks with catalysts. We've been using that technique to trade stocks short term now for over a decade. So that's one part of it. That's one part of the question. The next part is developing new strategies. And as managing a desk in New York City, we really focus in on, once our traders learn our core equity strategy, growing them out in options, growing them out in other products. And so we're constantly developing new education, new training for our traders so that they can expand. Because not only do they have to be flexible in how they're trading equities markets as they change over time, but they really need to be introduced into other markets once they have a core set of skills and they're consistently profitable trading equities.
Okay. So tell us about SMB Capital. What kind of courses do you offer? The cost? How often are courses offered?
Sure. So for our trading desk, trading guys for our desk at SMB Capital, there is no cost. We usually run 2 to 3 times a year. We bring in traders. It's highly selective. We probably get 10,000 plus resumes a year. Our education company, which is SMBU, short for SMB University, which you can check out on the web at smbu.com, has various courses on equities and other instruments throughout the year. I think the most popular program that was launched in 2013 in the fall, and we just actually are doing now our second session, is a mentoring program called DNA, SMB DNA, which is a 10-week mentoring program, which I think runs a couple of $1,000, which is delivered primarily 5 sessions through myself and Mike Delafiore, partner at SMB, and also traders have access to many of those core trading videos and lessons that are offered to the traders we train for our desk in New York City. And we also offer tools. The one way that I connect directly with people outside of my firm, each morning I'm doing a morning meeting for the traders on the desk. We've opened that up through SMB tools to members of the general public, and I'm pretty sure I'm the only pro trader trading full-time that's working at his desk each morning that actually is broadcasting his morning meeting outside the desk. I'm giving actionable ideas each morning. I'm trading, and people can actually see my trades and trades that traders on our desk are making live throughout the day with the technology we built.
So they can say, "Oh, Steve got me into that one. Oh, that's why I have a loser on that one, right?"
Yeah, that's painful when I see stuff like that. But again, I think for us, and one of the things that when we did start offering the training program to the general public, I guess 4 or 5 years ago, that we were giving to our desk, our training programs are at the core are what we call based on the principles of elite performance. And there are certain skills that need to be developed over time before people enter and start trading the market and risking real dollars. So I'd say on the trading tool side, yes, even the novice can come in and see what we're doing and watch, but we always encourage people who are intermediate to advanced level traders to take a mentoring program, start working with a mentor, even if it's not with us. But before you're risking real money, real dollars in the market, understand that skills that need to be developed, spend some time developing them, do some paper trading, and then slowly work your way into the market. So as not to kind of blow yourself up, which is what most people do when they come to the market.
So you got clients from all different facets of life, right? Some people that are traders and maybe have hit a rut that are trying to improve on their skills. You got probably college kids coming out that are wanting a career, maybe people that are retired. So you really got a wide variety of people that come to your firm to trade then, I assume.
Absolutely. A wide variety come to our firm to trade. And then also we work globally. I mean, we train traders for other trading firms around the globe. We train traders, we work with other exchanges. So I think that, if you go to Google and you type in, trading blog, the first result, I believe, is our blog. We have pro traders trading different products, different markets, writing and creating videos and content free. And I think we have the most prolific trading blog out there. And I think that's why we have over 50 countries a month, or maybe it's 100 now, coming to the blog, learning what we're doing. And it's everyone from the novice all the way up to pro traders. Pro traders are, also use our tools. And as I said, we've over the years, we've worked with training traders for other firms.
Okay. So I mean, just from what I've, gathered so far, you're pretty much trades are based on technicals. What type of charts do you prefer? What time frames do you follow? Just to follow up, do you trade after hours or pre-market?
So let me answer all 3 parts of that.
Okay.
First thing, technology, charting software. We have charting software that works with our platform. We create on our own proprietary platform. For those who don't obviously have access to that who aren't on our desk. You can take a look at TradeStation. You can take a look at eSignal. Those are two nice solutions that traders on our desk use. The most popular one is TradeStation. There you go, free plug. I don't get anything from them. The second thing, you mentioned about primary technicals. That's actually not the case. So that is one of the three factors we look at when we do make our trading decisions. The one thing that I think clearly stands out and makes us different from many other traders and many desks is it's one of three factors we look at. The other two being catalyst, understanding what fresh news or what's going on in that particular company or sector. And then the third thing is the tape. I think that's what we became known for over the years, is how we use the tape to inform some of our trading decisions. So that's a three-part process for us. And then I think the
after hours or after hours.
Oh, after hours pre-market. Absolutely. So because we began our careers trading NASDAQ stocks, which really those were the primary ones that traded in the after hours and pre-market, that's something that we definitely do. There's certainly a lot of money there. There's less HFT involved at that time.
Mm-hmm.
So traders on our desk, after they've been trained up, after about 6 months, we'll allow them to start trading a little bit after hours and pre-market. And generally, after a couple of years, it is a primary way that traders on the desk are making money. We've had many requests to develop a specific program for that. We haven't had the time yet to do it. And at some point in the future, I'm sure we will. There does seem to be a demand for it.
Yeah, what Instinet, right? Remember when you used to? That's
Instinet,
the way.
Yes, exactly. So when I first started Instinet, that was who we traded with in the pre-market, and the cost of trading with Instinet, people who trade today wouldn't believe what it actually costs for me to move in and out of my positions.
Yeah, I remember that. So so let's just take a look at something today that had some seemingly good news, trading up quite a bit here in the pre-market. J.C. Penney, many thought was on the road to zero here, popping up nicely in the pre-market here. It's trading up quite a bit. Now, so there's news on today. There's a catalyst. There's technicals. Is this something you think your traders may be getting dirty in today?
Yes, absolutely. And my last trade in JCPenney was actually on that flush below $5 a share. I bought a bunch, and when it popped up over the next few days, I stock tweeted about this yesterday. It popped up 10%, and I took it. I said, "This is a piece of garbage. I'll take that quick 10%." and here we are, 30% later. But yeah, absolutely. I'm not in front of my screen right now as I'm talking to you. So I don't know where. Last I checked, it was trading around $7 a share.
Yeah, it got up to $7.63 here in the pre-market, and we've pulled back to $7.40, $7.44. I was looking at this the $7.63 area coincides with 4 highs that you had in the issue back in January. So
I agree. I was actually involved in the stock then, and had a lot of trouble in the 760s, and so I would say from a risk-reward standpoint, I don't really like belonging up here anymore. And if it started to hold below 760 and drop 750, I think there might be some good money short. Next support area that I would think about based on my trading from when it was up at these levels is around 720 or so. So if it fails here and starts to come in, I'd be looking at the short side for a move back down into 720. Been doing a lot of different things this morning, so I didn't completely familiarize myself with all the news and everything. But from a technical standpoint, those are the prices that I'd be looking at based on the last time I traded it up at these levels.
No, that's good. So no, that's excellent. That's an excellent. I mean, I wouldn't be buying it up here either, but it's just another question. You got a lot of shorts, a lot of competition here. I like to keep an eye on the pre-market high. I know you're not in front of your screen, but is there anything else on your radar for today that traders should maybe pay attention to?
Yes, I actually just did sit down in front of my screen because I wanted to.
Sorry about that.
Punch up and see what's going on. Well, let me just mention Baidu briefly, which Baidu had a very nice run up into earnings, had it pulled back all the way to the low 150s. Spent the last week or so consolidating in the low 170s. 170 had been big support on the when it previously had made that run up to all-time highs. Looking at the initial reaction was very positive to earnings. Later in the early morning hours, it traded back down close to 170. It's now failed to hold above 180. So I guess my thought on Baidu is to watch 175 to 174. If it continues to support there, look to trade it on the long side for a move back up to the low 180s, 181-ish. And I guess that's it. I'd be a little bit concerned on the long side for Baidu. It took out 174. I'd probably move away from trading it on the long side.
Yeah, I also looked like some analysts were battling it out in that stock. Morgan Stanley downgraded it from overweight to equal weight, and Stifel Nicholas upgraded it here. So you gotta battle here of the in the ratings changes. So okay, we'll let you go and get ready for the open here. I just real quickly kind of the same question. I know you touched on it before, but just like to reiterate it. What are the most common mistakes new traders make? And along those lines, what are some tips you have for new traders?
Sure. I mean, I think the most common mistake that I see with new traders is they don't actually have an understanding of what the essence of trading the markets is. They think it's really just a knowledge-based thing where they can look at a chart, and if it looks good, they can get long or they can get short. And it really is about developing skills over time. And the easiest thing I can tell you to do to learn more about what the skills are is just go to smbu.com/blog, because we create a ton of good content there every week, and we talk about the skills that we're working with traders on our desk, how they're developing those things. And treat it, the one other thing is you hear a lot, and the common thing I agree with, is trading is a business just like any other business. We have to develop a plan, and you have to have a process over time, which kind of coincides nicely with this idea of developing skills. But people who think it's about the next hot stock tip, and they see there's a triangle and it got above a line, and I'm getting long, and like those are the things that you'd like to avoid. And so if you're listening to this morning, please really try to take that to heart and come up with a measured plan with your approach to trading. Whether you want to be a professional trader full time, or it's just something that you want to do on a part-time basis, which also requires developing certain skills as well.
And finally, the S&Ps had that breakout above 1846.50, which was the high on December 31st. We sprinted another 10 handles, but boy, we're having a hard time holding those mid-1840s here. Do you think that that breakout was a fake out here, and we're going to trade lower back down to 1800, or the Momo guys are going to win out again, and it's up to the 1870, up to 1880 area?
I think it's a really close call. I don't think it's strong either way. I could definitely see us pulling back a little bit closer to the 181, 180, 182 area. I could also see us moving up to the on the slides up to 187. The one thing I will say is we are in a very strong bull market, and regardless of what that pullback looks like, I think we'll continue to see higher levels before we have a more severe pullback in the market.
Okay, we've had Steve Spencer on, founding partner of SNB Capital, preaching good risk reward and learning the market. Steve, thanks a lot for coming on, and we hope you can find some time again to come on to the show.
Thanks for having me.